Another common marketing decision relates to accepting special orders. Companies may want to provide promotions or deep discounts to customers just to make a sale. But it isn't always just about making the sale. It's only beneficial if the sale is profitable. So that's what we're going to explore next. There's several things to consider when contemplating accepting a special order. The first thing is, does the plant have excess capacity? Or is it operating at full capacity? If it has excess, you might be willing to accept a lower price to take advantage of otherwise unutilized space. But if there is no excess capacity, there may be no reason why you wouldn't want to fulfill your higher priced orders. Second, how much money will you make on the order? We're going to discuss how much is good enough in just a second. But lastly, there are plenty of qualitative considerations to contemplate. I'm just going to mention a few, one of which is, will this cause any issues with your current customers who are paying a higher price? Or will it cause any issues with your competition? For instance, will they start to undercut you in the future? And if they do, can you sustain that? There are just a few things to think about. The actual factors are going to be situation specific. But let's get to the numbers. We're going to go back to a radio company that's in the business of selling radio components. The current sales price is $8 per unit. You may recall that we calculated that in our prior example. We also calculated variable cost per unit of $3.60. If you recall, we have 1,080,000 variable costs. Dividing by our 300,000 units gave us our variable cost per unit of $3.60. So let's just review what the results were for the first quarter. We sold 300,000 units, and again, the price was $8. Selling 300,000 units means we incurred variable costs on 300,000 units at $3.60. So when we calculate our sales and variable costs, which look familiar because they are the same numbers from above, we can get our contribution margin of $1,320,000, and that may look familiar because we did calculate that in our last example. Subtracting our fixed costs shows that we've got net income of $737,000. That's how much they made in the first quarter. Now let's contemplate two different special order decisions. Let's say that they could have gotten an order for 100,000 units at $5 a unit. Now if we quickly calculate what the total costs were that we incurred in the first quarter, we'll see that we incurred $1,663,000. On a per unit basis, taking that number divided by the units of 300,000, it shows that we incurred costs of $5.54 per unit. So getting a special order at $5 would be less than what it costs per unit in total, so you may just say, let's reject that order, it doesn't make sense to accept it. But that $5 is actually more than what the variable cost is per unit. And remember, fixed costs don't change. So I'm still going to incur the $583,000 no matter what. If I accept this additional order, I'm going to be making $5 an order, which is more than the variable cost per unit, so I may want to accept it. Let's just validate that by looking at a CVP income statement in this example. I'm still going to have my 300,000 units at $8. That stays the same as above. I have excess capacity, so I'm going to look to see if I should accept this new order of 100,000 units, and the price is $5. So my new sales, assuming I accepted that order, would be $2.9 million. I'm going to do the same thing with variable costs, which are $3.60 for every unit I produce. The first 300 and the next 100 are all going to be at $3.60. So my variable costs would be $1,440,000 in this case. So if I had accepted that special order, now my contribution margin I can look at would be $1,460,000. My fixed costs still are at $583,000. So my profit is the difference between those two, which is $877,000. Now if I compare that to my profit without accepting that special order of $737,000, I can quickly see that I'm making more money. So yes, I would want to accept the order. I make $140,000 more. So I make a profit. We're going to say, let's accept that order. Now again, you're always going to want to consider any qualitative considerations that I had mentioned previously or any other ones that were specific to the situation, but based just on the numbers, we're making more money, we would want to accept the order. Now the next order example is at $3. Would we want to have accepted a $3 order? Well, we can quickly see that that's less than a variable cost per unit, so most likely we're not going to want to accept that, but let's just calculate the numbers just to be sure. I'm going to go ahead and copy down the units from above because those are unchanged. I still, again, have the sales price of $8 for my initial 300,000 units, but the next 100,000 is only at $3. Variable costs are still going to be $3.60. That doesn't change. So my new sales would be $2.7 million, assuming I accepted that additional 100,000 units at $3, and my variable costs for the additional units as well would be $1,440,000. Now that's the same as before, because remember, it's 100,000 in both cases, and variable costs have not changed. So quickly I can see my contribution margin now, if I had accepted that order, would be $1,260,000, and again, fixed costs don't change, still $583,000. So accepting that special order would mean that I would have net income of $677,000. I can quickly see that's less than what I would have made or did make without accepting that special order. So I lost money and would want to reject that order. And we can quickly calculate that. The difference is $60,000. So we actually made less profit. And we're going to say reject the order. So, when you're looking at special order decisions, there's several things you're going to want to consider. But when it comes to the numbers, you'll just want to make sure you're making more profit after the order than you were before the order. The other thing you're going to want to think about is whether accepting the order is going to have any impact on your long-term viability in terms of selling at the $8 per unit to your existing customer base or customer base in the future. If for some reason selling at a lower price would deteriorate your sales price for existing orders, on a long-term basis, you may not have enough money to cover your fixed costs going forward. So you do need to be careful and cognizant of that.